Good morning. Welcome to Trade Talks. Today we'll be discussing on the broader market perspective for the whole month, and then we'll drill down to weekly and then on daily basis. The zones we need to be careful about and what are the trades we can take for the days coming ahead. So let's dive directly onto charts and what we see on the chart. So Nifty on monthly basis has taken a pause. The bearish momentum is fading out, and this candle shows us that there is a pause in this month and the bearish tone. This month has given us a perspective that anything beyond 17,800 and 16,800, a fierce rally might come up. This type of candle shows the confusion in the market. So we need to be careful taking trades for this month, for the month of April. As the VIX has dropped below 13, so we'll be expecting market to give us a range of 650 to 700 points for the whole month. So if there is a bullish momentum, if we see 600 to 700 points on the bullish side, it might land us to somewhere around 18,100 levels. And on the bearish side, if the momentum picks up, then it might take us to 16,600, 16,500 levels. But we need to be careful on the bearish side because the VIX might rise and the momentum might pick up. But on the bullish side, if the market is moving, the VIX might further drop. So the momentum on upside will be limited towards 650 to 700 points. So this is the overall perspective for the month. And on the broader perspective, this whole setup shows us there is a divergence on the bullish side. And if there is a further downside and momentum picks up on the downside because of recessionary fears, it might go all the way below 15,100 levels to 14,500 levels and then further at 13,200 and 13,300 levels. Yes, this time it's a this would be a very great investment opportunity after COVID crash. So we need to have cash for capitalize on this move. Yes, this move might happen next month or in coming months, but yes, this is quite possible. Seeing how the Fed is, the interest rates are hiking and the recession is evident and just waiting for a trigger, and that trigger might come up anytime in this result season or in the next result season. So we need to be very careful and positioned for recession. And one more thing, recession is evident and pretty much seen with almost every investor. So a sound investor, intelligent investor is always sitting on surplus cash so that this crash would be one of the lifetime opportunity to capitalize. And if you see a overall market picture, this is roughly around 30-35% down from all the way top. So this great investment opportunity will come up at 13,200 levels. So anything pullback from here to 18,200, 18,100 levels would be great opportunity to accumulate few puts, long-term puts of December or next year, March also, and capitalize on recession if market falls with aggression. So be prepared how the market behaves. And one more thing, next year is result season. So any Indian investor who knows about India pretty much are playing safe bets because of political uh, ups and downs and results and elections. So major investment cycle and major upside I'm not seeing in the market until unless this results are over. After that, we might see some major bull run which might happen in Indian markets. See, the overall picture for Indian market is this, and then we'll drill down to weekly aspects and what we see on weekly basis. So weekly, there are 3 to 4 perspectives we need to be prepared for, And yes, the bullish momentum, the last week bullish closing was super fantastic. But this bullish momentum happened on last 2 days only. The rest of the week was pretty much volatile. The stop losses was hunted both the sides. So the last week was choppy market, and the clear direction came on Wednesday and then on Friday, as Thursday was holiday. So for the next week, we need to be careful, as there is only 3 days in the next week, and this truncated week, the ATR of 480 might not be achieved. Roughly around 300 to 350 levels is quite possible for the weekly range. In this 350 300 range, we'll try to capitalize on maximum part, and the zones which we need to be careful about are discussed in the following daily chart. So these are the levels we need to be very careful about. One is 17,400 to 455 levels, where market might take a pause and then a slow drop, and then taking a support at 17,200 and then a fierce rally going beyond this zone. And then this is one of the scenario which I think which is highly probable. Another scenario is this zone is taken out and then the market goes beyond 17,600 till 17,800. So the broader market range what I see is 17,800 and 17,100. But this is on the bullish side, as there is only 3 trading sessions. So range expectation is from 17,600 to 17,100, 150 levels. So the overall range, if we see, it is roughly around 400, 450 levels. So this would be a broader range for the whole week. And we need to be very careful at 17,600, because if we see, this was a double bottom pattern which was engulfed here, and the immediate target is 17,600. So major profit booking could happen at 17,600. So at this 17,600 levels, we need to be very careful. If we have already long positions, it's better to book some profits at this particular place, as this gap would also be filled, and fresh shorts also can be done at this particular place. So we need to be careful at 17,400 and then at 17,600. In between, I don't think so market would pause, because this particular vacuum would get filled up in no time. These are the two scenarios which I see, which is highly probable. This is much more probable when compared to this. And then there is another possibility that my market might take some short positions here, might respect the supply zone, and slowly grinding way it might come to this point and then sudden drop at this particular place at 17,130 level. So the range of 17,600 to 17,150 levels might pan out in 3 or 5 cases. Then on fourth scenario, market might come down, respect the scenario, and give a little bit bounce and then further fall. And the last scenario, if the bearish tone continues, if there is sudden news or international market is not supporting bullish side, then there might be sudden drop, which might take us to the 17 below 17,100. Yes, one more thing. If market closes on daily basis, if market closes below 17,100, we can have some short positions building up, because this time around the market momentum might pick up and we'll be going all the way to 16,700. So if there is any daily closing below 17,100, I'll be taking few short bets, because this time this lows won't be respected, and 17,700 lows, 16,700 lows would come in 1 or 2 sessions itself. So this is the overall picture of market. What I see, the highly probable trades which I'll be taking are these levels at 17,260 levels. I'll be taking few long bets. At 17,400 levels, I'll be taking short bets only if and only market is little bit paused and coming at slow pace. If the market gaps up at this level itself, I won't be taking this trade. Then I'll be waiting for 17,600 levels. At 17,600 levels, I'll close my long positions which I have already taken on this week. So this I'll be closing at this particular place, 17,600 levels, and then I'll be booking. I'll be taking few short bets at this particular place. After this zone is crossed, I'll be very cautious, taking another long positions here, because at this particular place, this point will be very volatile, as market might be taking long as well as shorts SL. So it's better to not trade at this particular place. So this would be my no trade zone. As of now, this is the overall trade plan which I have on the Nifty. And on Bank Nifty, I have a couple of things which we can discuss. On the monthly perspective, yes, Bank Nifty is looking better. It has given a positive doji candle closing. So I see that market might go go beyond for 42,200 levels as well. And one more thing, three black crows. This is not a good sign. This is not a good sign. So it's better that whatever long trades we have, we take it up and book profit as soon as our target is reached. This sign is not good sign on the monthly candle itself. It's better to be careful. And on weekly charts, yes, weekly also market has given fantastic closing, and this momentum might further continue. And one more thing, this trend line has been respected more than 4 to 5 times. So I expect that this trend line would be broken in this month itself, in this week itself. If this trend line is broken with a great momentum, great force, then we're seeing 40,600 to 2,500 levels. So for the daily time frame, there are four scenarios, which is pretty much three on the bull side and one favoring the bear side. And for the trades which I'll be taking, so this trend line is respected 1, 2, 3, 4, 5 times. Yes, this has not touched, but still, and this right now it is again approaching this part. So this trend line is quite weak, and market might take out this trend line in Monday session itself. So if the trend line is broken, then I'll be taking few long bets here on the pullback and few short bets here. I already have few long bets, so that long I'll be booking here, and then at the pullback again I'll be building up positions for the long side for catching this. So as of now, this is most probable trade which I'll be taking, and then at this particular supply zone, if market does few time pass or time correction here, and then then a breakout is given. Then after breakout, the rally would be fierce. So after breakout, we take it's advisable to take trade at this particular place, taking support at this trend line, and then rally towards upward. And at this particular place, we need to be careful. This is a very strong supply zone, as we have seen in Nifty as well. This 17,600 levels was a very strong supply zone, and similar thing is seen at this particular place, 41,300. So at this place, it's better to book profits for long trade, which is already there with the traders. And after that, market, there is one more possibility, less likely, but yes, a market might pause a bit, might go below, do time correction, and fall below at this particular place, filling up the gap, and then the momentum continue towards upward. That is one of the possibility, and then sudden fierce drop, taking again small pullback and going below. So this kind of scenario, if there is a daily close below this particular levels of 39,950 levels, then at pullback we'll be taking short positions for capturing momentum towards downward. And one more thing, if the market closes below 39,950 levels, then the market won't halt till we break this low. So it's better to be prepared for all the scenarios. And if the market is of this scenario, fourth scenario, then aggressive shorts can be taken only after giving a daily close of 39,950. Till that time, short trades on Bank Nifty is not at all advised. It's not at all advised. So on the long side, we'll be taking few trades at this particular place and this place. So as of now, these are the two trade plans I have. And for the long trades, which I already have positional trade, which I'll be booking profits at this particular place. So as of now, these are the market perspective for Bank Nifty and Nifty as well. And if you have any query, you can comment. I'll be happy to address all the comments or all the queries that you have. Thank you for joining Trade Talks with Jitesh.